Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I just wanted to go over the kind of consolidation area that we're seeing in the chart today. If I was just to eyeball it, it would kind of look like this area over here, don't you think? Maybe one of these shoulders with kind of a high peak and then a smaller shoulder. And then we saw this kind of fractal play out right here also, where you had the shoulder and then a high peak and then a small shoulder. And all of this eventually led to a run up. So if we're just talking about this fractal alone, maybe it's going to lead to a small run up or something. But the magnitude of it does seem to be considerably smaller than the patterns that we were putting in over here. And here you had an upside down one, very similar, which ended up running the other direction. And so I'm not really sure if this is a reliable pattern, but there is some type of shenanigans in the price action going on here, where they're running prices up and down, liquidating everybody. And basically, it's an extended holiday, so I wouldn't expect to see too much price action getting away from the CME price, which is currently 39,800. So the fact that we're just kind of sticking around 40,000, it makes sense. Again, like CME, the professional exchanges closed for the holiday weekend around 39,800 down here. So do we take another stab at the bottom? I don't know, but I wouldn't really trust this price action on the weekends. Just everything's out of whack, and the fact that price action is kind of staying tight is usually a good thing because it means that hopefully the 24-hour exchanges and the professional exchanges decide to keep together, and we don't get any kind of nasty surprises. However, if we do look at the chart, we can see some interesting things. Of course, I pointed out this pattern previously based upon the EMAs. And if you were just trading the EMAs, then you would have been looking for, just reaching out to the 20s on perhaps the 6 hour here, where we dipped down, kind of got up to the 20 EMA, dipped down again, came back to the 20 EMA, dipped down again. And here I said this was probably a good buy-in area. And sure enough, we popped up to the 20 EMAs, broke down again, found support on this diagonal, popped up right to that 20 EMA. We even came down again and popped up again to the 20 EMA. So again, like a EMA trading can be really powerful. And while you can definitely get some nasty surprises, for example, this dip right here stands out, you will notice that it comes back to the 20 EMA and at least the 10, when you're doing these things. So, we can have considerably more of a fall than you would expect, but when you start to see these curvatures on the 10s, then you can consider what type of policy that you'd like to have for your own trades. You can go ahead and look that up yourself. But, I did suggest that this was a good place. We were at support. This is a lot of nice support in here. And, it's turned out pretty well, whether you bought in on this confirmation or this confirmation or this confirmation. And definitely if you bought in on this one, you're up, right? You're up in the market. And then if you had taken a short up here where I was suggesting we would probably come back to 40,500 if we were going to go bullishly and then break down if we were going to be bearish, then you probably would have been pretty good there also. The same as if you had shorted here, right? Or, when we didn't hit the 20 up here. But I don't personally do leverage and I don't short, so, that's up to you. But yep, we're still in this consolidation range. Whether or not we have a kind of a pattern like this where we come back down and break down again, not sure. We can take a look at some of these, some of the volatility that's building up, and even on the 6 hour, you can see we're starting to get into those areas where we could be bottoming out. So if we see an expansion pretty soon, don't be too surprised. 4 hour is kind of suggesting something's going to happen. 3 hours screaming it also. So, again, the 3 hour and the 4 hour kind of suggesting that something might happen pretty soon. And we are in a little bit of an uptrend, in the sense that we have higher lows. But the problem is we also have lower highs. So we're also in a downtrend. And so where does this thing break? I don't know. I don't know. If you took this trade and you've been moving your stop losses up like I suggested, then you're probably pretty good to go for a possible long. And, personally, I wouldn't change that policy. But the fact that this has been a fairly powerful downtrend and with the volatility that high and volume pretty low, then, we could possibly see another drive down. So just, advice I'd give myself is make sure you have those stop losses updated if you are in a long. And let's go ahead and see what else I've had marked out here because this worked out pretty well. I think we're at the end of it. The fact that we're kind of holding this area as a higher low on the very short term, whereas this was a lower low compared to this area, just suggests to me that, well, you know what? It's not even so much that we did it here because we had a complete breakdown here under similar conditions. But just we're in this area where we've kind of been getting these pop-ups. So, I did think that this was going to be support. The circle was a suggested buy-in. But this whole box is what I suspected might be support based upon the diagonals. And this is the diagonal that it was based on, this wick down here, and then the fact that we were holding these diagonals, I noticed that they were all in alignment. And sure enough, this has been holding up, and we're actually bullishly higher than it, but it could come back down. This is actually the rejection from the Fibonacci channel that I mentioned several weeks ago, that we would likely get rejected right in this area. And that's just been a hard rejection. If we do pop up, I would just think that we would get rejected here again. Pardon me. Again, like these Fibonacci channels have been pretty resistant in the past. We had one here, we had one here, and they've just been pretty tough eggs to crack, okay? So, if you wanted to go long, of course, how you trade is up to you, but, if I was doing it, just I would probably expect to top out somewhere around here. And that would be consistent with perhaps, on the 6 hour checking back with the 200s. Sorry, that was the 3 hour. The 6 hour would be, that's interesting. Yeah, so yeah, it would still be the 200s, this whole area, this 43,000. But do we actually get up there? I don't know. We just haven't been pumping that hard. We haven't been pumping into these 50s areas, but we were breaking down the 200s on the 6 hour. Let's look at the daily. Yeah, daily does look ripe to actually check the 20 pretty soon. So that would be approximately 42,000, 41,500-ish, that kind of area. And if this ends up curling up and just kind of checking it and getting rejected, then that might be an area right here that we could expect. In these movements, we've kind of blown past it because we've gotten into squeezes. So if we do get into a squeeze, again, if we break above this diagonal, that's going to be a fairly bullish signal to me. That breaking that $42,000 area, kind of sitting on top of it, 42,500, and then breaking above like a 44,000, let's say 44,500, kind of $45,000 area, kind of sitting on top of that on the daily. And then we're getting above this 200 again, right? And so this could have been just a massive fake out. But right now, I don't have any reason to believe that because all of these EMAs are pointed down, so it's all bearish. We do have this kind of like a massive trend line. I've pointed this out on other charts several times. But we have this kind of massive trend line where, during the bull run, we got above it, used it as support, had some nice bounces, broke down from it, freaked everyone out, kept bouncing on top of it. Nice run, right? Kind of aligned with our 200s on the daily, more or less, but it was a little bit more generous. So I prefer using this as support rather than just the 200s. But in this case, either way that you're trading, the 200 or this kind of like a purple diagonal here, we've broken down under it. And when we broke down above, I mean, when we broke above it, you could see we had a pretty big run above it. And same thing, like when we broke, above it, like we had a pretty good run. But it looks like we're not just like kind of wicking down below it now. Like that could have been this, right? This could have been just like a little testing the water, kind of like this. This could have been like this, and this could be like this. And maybe we just like dipped our toe down and then had another run. But the thing that's kind of made me a little bit skeptical about this price action is the fact that we've tested it, once, we've tested it twice, tested it again, didn't even reach it, tested it again, didn't even reach it, tested it again, broke down after like just touching it. And so I'm really questioning whether or not we're getting to that point where we're actually going to have, like if this was inverted, right? And let's say we broke down under it, if we're really going to have that kind of, drop. And so I'm just very on the lookout to see if we have some type of drop or something, because this line does seem to be pretty important. And we do just keep touching it, 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 touching it. And if you're not paying attention to that, then, you maybe have been a little bit over bullish in this area. There were several reasons to be bearish in this area, and this is just one of them. It's not even the most important one, to be honest. And so here we are at the bottom of support. This is kind of the midline that I've just established just for this kind of price action, just based upon our current setup, nothing much more than that. And the tops of this kind of like a horizontal range, the tops have pretty much been pointing into this kind of zone. And so this would be the zone that I would expect to have a hard rejection, like if we do get up here, and if we get on top of it, again that 45,000. If we sit in that 44,000 or sit on top of that 44,500, then it's going to look quite good. But if we get rejected from this 43,500 area or $42,000 area, then I'm just thinking that we're actually going to go for our rundown, to be honest. And I personally wouldn't even be thinking in a bullish direction. Pardon me. But as long as we're in this area right here, I don't know, because we are technically at support. And if you're at support, again, like I recommended to actually buy in down here, right? On these smaller time frames. I recommended to buy in here because we were at support, and you buy at support. Because a lot of the breakouts are actually just fake outs, right? So if you bought on a breakout and it just ended up being a wick, and then you came back down, I mean, you could get wrecked. So it's better just to buy at support and put your stop loss underneath it. At least support, you tend to get pretty good bounces. Just my opinion. And then, you kind of hope that you get into a squeeze play. If you don't get into a squeeze play, like this was a failed squeeze play, and this one was a second chance, but it looks like it's also being failed, just like these two failed, just like these failed. Then eventually you're going to roll over, so you don't really want to buy in too late. If you at some point it rolls over, and maybe it'll just test the bottom of the range. This is another significant line. You can kind of see the price action right here lining up with it, this diagonal. You can kind of see the price action right here lining up with it, and then these peaks. And then, we've kind of got like a counter angle here. I've just kind of thrown this in because it's sort of a midline between these two areas that's been pretty interesting. Pretty interesting. And the thing is that if we get over 41,500, like this is no joke. If we can actually hold that area and consolidate there or just, continue bullishly, then this midline actually does have something to it. And I'll show you that on the stochastic. So for example, even on the 2 week, right? On the 2 week, you can see that if we close above 41,500, then we're going to start to cross up, right? So we have a chance to kind of just continue down. You see how this kind of like a little dent in this chart here? We could continue down, just a little dent right now. But if we do end up holding 41,000, well, this is saying 600 now, but 41,500-ish, then potentially we could end up having like a curve like this. And that would bode well for Bitcoin. That would bode well, right? And since we do have, some type of softening on the 2 week, just a softening, that would give us the chance that we would need to potentially curve up as opposed to just continuing, with another red zone. Because you can see sometimes you get multiple red zones in a row, right, on like the MACD. And so this isn't guaranteed to turn blue next just because it's softening, right? You can still have more red to come. And so that 41,500 is really a key area that we want to take a look at for several of these time frames. Let me go ahead and take a look at the 4-hour. And the 4 hours already turned up. It's saying that we'll cross down under 40,000. So, we're kind of borderline right now, right? We're borderline. We're closer to 40,000 than we are to 41,500. And we're getting a lot of kind of choppy wicks on the upside, which is not good. Sell pressure down. So what we want to see is popping up here to that like $42,000 area and then holding on above this area. The same thing that I've been saying for a long time now. And it's just interesting to see lots of things working out in this way. And the geometry is also working out. This is very much still in danger of being a breakdown, a serious breakdown from this purple diagonal. And it makes sense, right? Like economies have sine waves to them, right? They have wave patterns. It's not just one thing, right? They have wave patterns. So, if you want to get higher, you need a correction low. That's just all there is to it, right? You want a high, you need a low. So honestly, I kind of hope we have a bigger dip because I'd like to see us have a bigger run. Can we just explode up? Yeah, we could do that, but the economy is very weird right now in the world, and it's just very unlikely. There was some good news this week, and I'm not sure if you heard it or not, but China is quantitatively easing right now, so they are lowering interest rates, and this is a divergent policy with the US. So now we have the two biggest economies in the world having divergent, interest rate policies, and that was something that this is going to be very confusing for the market. China's real economy is doing very bad right now. The US's real economy is doing very good right now. The US's stock market and like crypto and all these things obviously are seeing a bear market, and obviously inflation is crazy, right? And that's putting the boot on the neck of a lot of people and small businesses. But in fact, the overall economy is in fact overheating. And so we actually do need to cool down to fight that inflation. Whereas China needs to stop its markets from collapsing. And so it is going to be lowering rates right now. And I think that's going to actually help stabilize US bonds. And so we've been talking about the bond yield, inversion or whatever, but yeah, it's a complicated picture right now, and maybe we need to also see what Europe's going to be doing. So just keep a lookout for that because this could dramatically influence what the US Federal Reserve does in May. And that could, if China's lowering interest rates and Europe's lowering interest rates, and, bonds are stabilizing in the US and blah, 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 then the Federal Reserve in the US, they might decide to go a little bit easier, in terms of their interest rates policies than what they said they were going to do previously. But the problem is that inflation has been so high that it's almost like their hands are tied. So, like, the market really doesn't know what's going to happen next. And just these major powers are starting to have policies that are at odds with each other. It's just something to pay attention to, okay? That's why we're seeing this weakness in the charts. Just to be honest, to be very honest, we just don't know which direction the world's going to go right now, which direction the world economy is going to go right now. And we are on the brink of a global recession on multiple fronts. If China tilts one way, if the US tilts one way, if Russia and Europe tilt one way, and then we have the third world countries, which are also struggling from the side effects, right? Like they catch the flu whenever these major countries catch a cold. And so this is a very complex scenario going on with lots of moving parts, and the medicine for it in terms of the government actions, they don't all gel together. So just be aware of that, okay? That's why this chart is so weird. And let's see, what else do we have on here? We also have our 50, kind of 89, kind of 50 area on MAs on the 3-day chart, which correspond with the major movement in 2018. And then we also have the 200, right? The 200 EMA, which also corresponded with the major movement in 2018 in terms of that fractal pattern, right? This kind of fractal pattern that I tediously mapped out, put a lot of heart and energy into to try to consider what if this scenario is the same or relatively similar as this scenario using the momentum geometries, right, of a hypothetical blow off top that was delayed into this double top, kind of rounded top area. And what we determined is that if this scenario is playing out with a similar momentum just spread over two waves, right, this double top as opposed to a blow off top, is that we would have until mid-May, and then mid-May to March, or mid-May to March, mid-May to mid-June would be a very dangerous area for us right here. And so let me go ahead and turn that off because it's pretty distracting. Going to turn off my EMAs. I think you can see it on the 3-day. What I'm talking about, these blue lines constricting down. Everything's pointed in the same direction. Then you see these 200s, this white line and this orange line. That's the 200 EMA and the 200 MA, and they're converging. They're converging at the same point that the rest of this chart is. So just going to get off the 3-day because I don't find the 3-day particularly useful, except during these traumatic dips. And so we see here, this is converging here. We have this kind of midline here, and then we also have these EMAs, and they are all converging into this area, right? And so that tells me that if we don't get above this midline and then above the top of this area over up here, which this is so confluent, confluence. These are two confluences, two confluences, two confluences, and using EMAs, using momentum, using volatility, just using the overall structure of the market, right? I mean, this line also represents that. And so we're not even fully out of the woods until we get to 50,000, right? Because then we're going to be safely on top of this diagonal. And yeah, if we get to 50,000, 51,000, for sure, I'm going to be bullish on that. But that's so far away that we have to deal with these kind of like a middle gray areas first. And again, like we're entering this danger zone where, personally, I'm a bit wary. We could go up or we could go down with extremely high volatility. Where, Crown has always been talking about the volatility on the 5-day, and we are starting to see for the first time here kind of an upward slope on this volatility. And while this one is still flat, if we get an upward slope with that, that could suggest that some major expansion is going to happen on approximately the 5-day timeline, which could take weeks to play out. But, we are having these crosses down right now, right, on the Stokes. And again, this is what Crown is pointing out. It's Crown with a K, not Crown with a C. Crown's Crypto Cave. And we also have our momentum turning down on the 5-day. And so if we do have continuation and expansion, if we have expansion, it would be in the direction of our trend, which is to the downside, where this becomes a higher low. And so this is very dangerous. This is an extremely dangerous situation to be having, unless, again, we flip these areas and get our momentum to the upside, get our, Stokes, get our momentum, get our EMAs, get all of this stuff leaning to the upside before that volatility just, explodes, basically. And let's say that 5-day fails, then we do have one more thing on the horizon. And these might not be mutually exclusive. It could be that one plays out and that the other also plays out, just on a different time scale. Okay, but we also have this contraction on the 2-week, and the contraction on the 2-week corresponds with the hypothetical geometry from based upon the 2008 momentum geometry, which would suggest a major expansion coming after that. And so in my model, right, just in the way that I'm thinking, is that perhaps that 5-day does play out to the downside. Perhaps the 5-day plays out to the downside and we get this kind of huge drop of maybe even 50%, right? So could we see $20,000 Bitcoin again? Yeah, we could, right? And then the 2-week expansion plays out. And the 2-week expansion, because once we bottom out, because let's say that the 5-day takes us down here. This is the 2-week. Let's say that the 5-day takes us down here. That's what the 5-day looks like, right? So it's going to suddenly explode, but exploding to the downside. And then once we hit bottom, right, then this 5-day chart is probably not going to be useful anymore. It's just going to be kind of consolidating again, consolidating again in this yellow area, right, or just after it. And because it'll obviously be expanding down during that time. Then after it, you'll get some type of, consolidation. Who knows, for months, for weeks? I have no idea, right? But and then the 2-week, then the 2-week might play out. And as long as we're recovering from our dip, then potentially the expansion from here could be just, after this plays out, then maybe the expansion from here, it could just be one of the most phenomenal things you've ever been part of in crypto, right? Like this area, this area. Like those breakouts have been no joke on the 2-week volatility. I don't hear anybody talking about that, so this is just kind of an original concept. But I think that well, we have to wait and see because we could also get like just a little choppiness like this, and maybe it just takes a long time, and then we come back like this maybe like even a year later or something, right? But if you look at the angle of this and how we've kept in this expanding channel, there's a reason why I'm using the 2-week, right? Because the monthly doesn't tell you anything, the weekly doesn't tell you anything, but the 2-week tells you something. Just like why Crown uses the 5-day, because the 5-day tells you something. You can align these with certain things. And it's not guaranteed, it's just, you just have to make a hypothesis based upon other confluent factors. So that would be what I'm looking at. Again, on the 2-week, if we did have a major push down, we could end up seeing like lows like this, which again, on the 2-week, you do have this kind of diagonal that kind of runs here, and we really haven't reached those levels, right? We reached it here. This is what, 2015, 2018, 2020, and we haven't reached it again yet. So it's just all of these factors taken together suggest to me that we want to reach this area again and that we're approaching it. Then a little consolidation, and then the 2-week momentum takes us on another one of these type of runs. All right. Because 2 weeks just means it could play out over months. It doesn't mean it plays out over 2 weeks. It could play out over multiple sets of 2 weeks. Okay. So it gets the ball running in a certain direction, and then momentum takes over, and maybe the economy starts to recover, or money flows in, that kind of thing. What we would really hope is that that doesn't happen to the downside, because then Bitcoin's dead, right? So most people are not predicting that, but hey, man, this is crypto. Anything's possible, right? More locally on the 4-hour. Yeah, just want to stay above 40,000, getting some. Don't really have the clearest indication of a direction right now. Yeah, just really want to hang on to that 40,500. Yeah, all these lower time frames, they just really want to hang on to, let's say 40,700 just to be safe. Yeah, and some of them are even a lot lower. So, yeah, let's keep a watch for those prices. Otherwise, we just don't know when the volatility is going to take us on an expansive ride up or down. But yeah, we should try to stay above that 40,000 to 40,500 area if you want to feel safe. And that would be confluent with these EMAs. Where we're really not going to get an upturn on the daily unless we can get into this, this kind of curve. It's going to be quite difficult. You really are going to have to shoot up here. So, yeah, that 42,000. Yep. Just to maintain a neutral posture is that, 40,500 to 41,500. And then to have even a chance at bullish posture, you have to be over 41,500 and definitely preferably over 42,000. Okay, guys, I'm going to wrap it up there. That was your alpha for the day. Trade safe and happy trading.